Good morning, traders. You're watching Trading the Matrix episode number 11. This is a video series that I've created where I pick out a single stock, cryptocurrency, or currency pair and go through an in-depth analysis on that pair and give you my thought process. Standard disclaimer before we do get stuck in, I do not present this to be the only analysis, the best analysis, or even the most complete. I always encourage you to take a look at what other analysts might have to say to get more of a complete picture and do your own analysis yourself. Nevertheless, let's get started. So today we're going to be looking at USDCAD, and I'd like to discuss the potential daily pattern that's completed and the beginning of the upside. So we're just going to look at what's happening from this moment forth. That will be the biggest basis on what we're going to determine where we're going. We'll start off as in a monthly. So following this impulse down, we do have our first impulse up, some sort of a pullback and another move to the upside. Between these 2 points on a monthly time frame, there is no divergence. On a weekly time frame, however, there is quite a bit of divergence between this piece and this piece. So that's these two pieces. However, although there is the divergence between those two, there isn't any in this singular piece that we've got moving up. So from here to here, there is no divergence. So we can expect, at least on this time frame, one more break of the top. If you were to look at this to be some form of a flat, I'll draw that with actual trend lines. So that's here. You could potentially look at that as a flat, and it is valid for multiple reasons, but I'd like to discuss why I'm not looking at that at the moment, and that would be through the information that I've gathered in that final piece over here. So on a daily time frame, obviously we have our move up here, and then following that impulsive up move, we've got our first move down, some form of a pullback, and then another move down here. The first thing that I'm going to be looking at is this. Let's move that to the 2 minutes as well. Okay, cool. So on a two-day time frame, impulse, we have an A and a B and a C with divergence between these 2 points over here. And the reason that I pointed out is I'd like to see is that if we were to consider this our flat pattern as the ABC, from this moment forth, all we could expect is a continuation to the upside to break this top. And that's what I believe we're seeing currently. What I'll do is we'll move down to a daily time frame and actually look at the individual piece over here and what to expect. So the first thing that I see here is we're just going to label the flat patterns or the corrective structures that have helped with this move up. So this is how I see that. Let me just go. So we have a WXY with this final piece being our ABC. Within the time frame, on a two-day time frame, there actually isn't any divergence on this move up, and you can see that visible here. So if we just drop our horizontal, turning this and this, we've got no divergence between these 2 points. So we can even just, if this wasn't to go the whole way up, all the way up to break this top, we could definitely see a move to break this top. And then when we do break that, the market will give us enough information or more relevant information to change that perspective or to hold on to that perspective. Moving on now to a 4-hour time frame, actually an 8-hour time frame would be better suited for this. So we've established that this is the WXY, and we are looking for one more up. Our first target obviously to break here or to break here. Now, looking at this sideways piece that we've got here, the first thing that's going to stand out to me is very simple. This in itself is a pullback. If you wanted to go down on the 4-hour time frames, you can definitely label the individual wave structures within that. But just for the sake of this video, we won't. And then the second part that's also going to stand out is what's happening here. So I'll draw two horizontals. How I'm looking at this at the moment is, I'll just draw these. You haven't spotted it. So we have our A, we have our 1, 1, 2, 3 for our B, and then another move down, and then our C wave up. So this is our A, our 3-wave structure for our B, and then our C, and then we do have another move down. Okay, so since we've established these two corrective structures within the time frame, let's see where they both stand within the story that's actually being told right now. So getting rid of this, I'd like to compare these two pieces to see if they are similar and if they do belong to each other. How we can do that is very simply just getting our time box, or our time factor box. I will measure the time stamps between the two and actually how long these individual corrections did take place. And as you can see, I've just copied that across. They are very similar in time, which is awesome. We can put those things into the same story or the same, I guess, chapter. So if we've just labeled these two as the same piece, let's take a look at the MACD to see what that tells us. So we've got no divergence between this piece and this piece, so here and here, but we definitely do have divergence between this piece and this piece, so here and here. First thing that's going to come to mind when I say that is W, X, Y, X, Z. And because our X is similar, we can label that soundly using elliott wave. Okay, and we have obviously broken this low. So when we do break the low in this kind of situation, we're automatically changing our trade biases to go for longs. Sometimes you might get a little bit more sideways, something like this, and then reverse. Other times it's just going to drop for a sharp Z and then reverse. So looking at the actual break of that bottom, let's see what's happening now. So 4 hours go right. Let's go to the 1 hour. Okay. If you were able to catch what happened in here, awesome. That was fantastic. I would never look to trade something that looks like this. Reason being is that this in itself, if I see this in a normal structure anywhere across the board, I'm looking for this to correct and come back down. I'm not going to pick a reversal that's going to look like something like this. And the reason being is that we've just had a very impulsive move down. If I'm sitting where I'm sitting here, you've got a pullback to the 886 in that initial first impulse. I'm looking for this to come back up, maybe retest the top and then continue down. So obviously that first piece in itself has just reversed and it's gone up. Now, looking at these pieces over here individually, you can definitely label this is your first flat, and then you can also see that you've got a flat pattern or a contracting flat pattern with what looks to be an expanding flat to follow. These are your two corrective structures that have played out. Right now, we've got no MACD within the time frame, so we can assume with strong probability that this is, or this could be the start of the upside. More than likely it is, and that's how I'm looking at it. We also don't have any divergence between here and here, so this would be W, X, or Y. What we can then expect to see is something similar to what's happened here. So if we were to just copy this whole piece, if we got another similar, obviously it's not going to play out exactly like this, but this is just to help illustrate what could play out. We could see this move again the way it did similar, and then a continuation to the upside. In the same sentence to that, we could actually see this continue up, just create a little or a smaller time frame correction before continue up. Either way, we're looking at longs now. We do also have a break of this trend line, and then this trend line itself, I wouldn't say is the most valid, just because of the steepness, but obviously that trend line, it meets the rules, so you could use it there. So for the next week, coming weeks, we're going to see more upside every time we get some form of a correction. Anything that looks like this, anything that looks like this, anything that you can see and you've been able to label correctly, we should be going long. Where could this go on a higher time frame? Well, I'll touch on what we mentioned before. Our first target is definitely the break of this high. So more corrections up. So we might, when we do reach the this trend line over here, we might get a larger correction just to build up more momentum before continuing going up. If you're not in a long already, I would recommend waiting for something like this to play out, just because it's going to help build that momentum and get you into a more probable trade, especially if you've missed what happened at the start over here. It's going to be a bit hard to get in and be able to hold longer trades from this point over here. You'd be able to get in and hold, maybe take your profit around this price, but with a larger correction that should play out on a higher time frame, we'd get a spike back down, and you just don't know how big that correction is going to be. So I'd be, if you're in from this point, hold your trades. Moving to break evens, don't touch them. This should continue up and break the top of you. Awesome risk to reward. Just have the patience to hold on to that. If you're not in already, look for a smaller time frame correction, get in, take profit, and wait for a larger correction in that you can get in and hold. That's it for episode 11, guys. I hope you enjoyed, and see you in the next one.